What's up YouTube? Welcome back to this channel where I help you to get started in property investment. Now today we are going to look into what kind of project that you were able to buy based on your salary. Coming right up after this. Before we get into the main topic of this video, if you are interested to grow your wealth over long term, I have a free course just for that. A free course on getting your first investment property. You can find more in the description below. Now say for example, if you were earning 5,000 per month, what kind of project that you be able to buy? Now let us rephrase the question properly. We should ask, what kind of project that you will be able to afford? Now this is the actual question you should ask. Now for us to look into to assess our affordability, first thing first, we have to understand how the mortgage loan works. Now we do know that mortgage or any kind of loan that you get from financier, right, be it the bank or anyone or maybe your parents, that is always an installment that you need to pay every single month. Now there are three key components in any kind of loan. Number one is the interest rate. Now any kind of money that you're getting from somebody else always incurred an interest. Number two is tenure. Now the loan tenure basically is how long that you're going to pay it back to the lender. In this case, it's the bank. Number three is the loan sum. Now obviously when you get financing from anyone, it always involves a sum value to it. So these are the three main components that determine what is your installment. Now we don't need to calculate the installment manually. All we need is an app. That's all. For this, we will use the financial calculator. Right. The first thing is how much are you going to buy the property for? In this case, let us put an example, 350,000. The interest rate, let's say 3.25. Because you're young, then you can get the tenure for loan term 30 years average. Then you click calculate. That's all. It's that simple to calculate how much is the installment. Now this is the first part because you already know, say for example 350,000, the monthly installment is 1,005. Now the next part is you need to know how much is a disposable income from your salary. So this is a quick way how you can calculate how much that you can actually afford it and to find out your disposable income. It's very easy. The scenario is at 5,000, right? 5,000 ringgit gross income. So roughly we will minus off the EPF, we will minus off the PCB. PCB basically is the income tax in terms of installment, right? So you times 0.8 means you minus 20%, so left you with 4,000 ringgit. After that, you need to deduct your living expenses. That usually going for like 30% of your net income. So minus of 30%, left with 2008. So you probably have like a car, or maybe you will have like some kind of loans. So minus off any liability or borrowing that you have that will appear in your secrets report or CTOS, right? Say for example your car 1,003, that is, I don't know what car is that, you pay for 1,003, and then you minus off with maybe any kind of personal credit card, 5%, 300 ringgit. That left you with 1,002. So this is your disposable income. Now here's how it works. When you find at the beginning that your installments is actually 1,005, whereas your disposable income is 1,002. So it means that you're unable to afford for this property. So if that's the case, then you have to lower down your buying price, right? It could be, in this case, because you can afford for 350,000, so you have to look into maybe 280. Okay, 280. So it means that you can barely, just borderline, can afford for the property. Now this is a quick way for you to assess your financial situation, whether you can actually afford for the property. Now I usually recommend for you to assess this part right here first, your affordability first, before you look for property. Because if you look for property first like this, you're going to get the 280,000 property, whereas after that you know that you're unable to afford for the loan, then you're going to waste your time. So you always advisable for you to assess your disposable income first before you look for property, right? That's the one part of it. The second part that you need to see is that this is a borderline, because you left with the disposable income of 1,002, whereas the installment is 1,002, means you don't have savings. You cannot do an investment where you use up all your cash flow, okay? Because you need to allocate some fund for rainy days. So that is the topic for another day, okay? You need to manage your cash flow properly and make sure that you can actually afford for the property before you really commit to it. Now, and of course, once you know if you can afford for the property, then you need to know how to find a good property. Now for this, I provide you with a free course, how to find your first investment property for free, right? You can get access to the course absolutely free down in the description below. And I'll see you in the next video.